Okay, let's just be honest. The crypto market right now is in a state of, well, constant chaos. We're seeing huge shifts everywhere, from Washington, D.C. all the way down to the actual code that's supposed to be securing our assets. And trying to make sense of it all can feel pretty much impossible. But what if you had a clear strategy to cut through all that noise?
I mean, think about it. One day, you're reading about some quantum computing breakthrough that could literally break Bitcoin. The next, you're hearing about billions of dollars flying out of ETFs because of Fed policy. Then, out of nowhere, a major bank files for a Solana ETF. It is an overwhelming barrage of conflicting information. So the real problem for every single one of us is, how do you turn all of this market noise into a clear, actionable signal?
We're calling this the Hive Block Strategy, and you should think of it as your personal decoder for the crypto market. It's a simple but really powerful framework that's designed to bring a little bit of order to the chaos and, hopefully, transform you from just a passive observer into a confident strategist.
So the whole strategy is built on 4 core pillars. First up, you've got education, so you can actually understand the why behind all these market moves. Next, of course, is security, to protect your assets from threats that exist today and the ones coming in the future. Then there's diversification, which is about more than just different assets. It's about spreading risk across different ideas. And finally, we have compliance, which helps you navigate the, let's face it, constantly changing regulatory landscape. Each one of these is a lens we can use for our analysis.
Okay, so theory is great and all, but let's see how this thing actually works in the real world. We're going to apply the Hive Block Strategy to 5 of the biggest news stories happening in crypto right now. We're going to see how it turns these confusing headlines into a clear action plan.
First up, regulation. A big, comprehensive crypto market structure bill in the US, the Clarity Act, has just been delayed again. And this, as you can imagine, creates a ton of uncertainty for businesses and for investors. So what do?
Let's apply our framework. Looking through the compliance lens, the message is crystal clear. Be prepared. With all the rules up in the air, the absolute smartest move is to document every single transaction. Go use a tool like CoinTracker or Coinly, so you're ready for whatever comes down the pike. And then the education lens reminds us that this whole regulation thing is a marathon, not a sprint. So for now, the action is to prioritize regulated platforms, think Coinbase or Kraken, that are built to adapt to new rules.
All right, let's shift gears to our second development, and this one is a big one, the quantum threat. To deal with the risk of future quantum computers breaking Bitcoin's encryption, a new quantum-safe testnet has just launched. Now, this might sound like science fiction, but it is a very real existential security challenge for the entire space.
And if you think this is some distant, far-off problem, think again. Ethereum's co-founder Vitalik Buterin himself puts the probability at 20% by 2030. This is a huge deal because of a strategy called Harvest Now, Decrypt Later, where bad actors are probably already saving encrypted data, just waiting to break it once they have the computing power.
So this is where our security lens is absolutely crucial. How do we turn this threat into action? First, and this is non-negotiable, never ever reuse crypto addresses. Every time you spend from an address, you expose its public key, which makes it more vulnerable. Good news is, modern wallets do this for you, so just make sure that feature is on. And second, for any of your long-term holdings, cold storage, a hardware wallet, is your single best defense against these future quantum threats.
All right, let's pivot from security to the market itself. Our third development is all about macroeconomics. Recently, we've seen these massive outflows from both Bitcoin and Ethereum ETFs, basically wiping out all their gains for the year. But this wasn't driven by anything happening on-chain. It was driven by something much, much bigger.
I mean, the scale here is just staggering. $1.3 billion flowed out in just a 4-day losing streak. And the reason? The market's expectations for a Federal Reserve rate cut in March completely collapsed. This just perfectly illustrates how tied into the traditional financial system crypto has become.
Applying our framework here is so key. The diversification lens tells us to separate our long-term accumulation strategy from our short-term trading. Look, if you believe in the tech for the next 5 years, these macro-driven dips are buying opportunities, not sell signals. And the education lens, it points to a new homework assignment for all of us crypto investors. You have to monitor macro indicators like the CME FedWatch tool now. All the institutional money depends on it.
Now, while that short-term sentiment might be down, the long-term institutional thesis is actually stronger than ever. Which brings us to development number 4. Standard Chartered Bank has come out with an incredibly bullish projection for Ethereum.
$40,000. That is their price target for Ethereum by 2030. And their thesis isn't based on hype, it's based on fundamentals.
Things like Ethereum's dominance in tokenizing real-world assets, its role as the backbone for stablecoins, and all of its planned scaling upgrades.
Okay, this is where the diversification lens gets really interesting. It's not just about owning different coins, it's about owning different theses. Is your portfolio weighted towards Bitcoin's monetary premium as digital gold? Or is it weighted towards Ethereum's role as this global settlement layer for tokenized assets? And the education lens gives us a way to check our work. We can track on-chain metrics like total value locked to see if the bank's thesis is actually playing out in real time.
All right, on to our final development, which just goes to show how deep this integration with Wall Street is becoming. Morgan Stanley, one of the absolute giants, has just filed to launch its own ETFs for Bitcoin and, very notably, for Solana.
This move signals three really crucial things. 1. Institutional integration is only getting deeper. 2. Wall Street is now very comfortable packaging crypto into these regulated products for their clients. And 3. They are officially recognizing the viability of alternative blockchains like Solana, moving beyond just Bitcoin and Ethereum.
So our framework gives us two really clear action points here. The compliance and security lenses force us to evaluate a critical trade-off. Do you want the convenience and regulatory safety net of an ETF, or do you want the total control and sovereignty of self-custody? And then the diversification lens suggests, you know what, you can do both. You can diversify not just your assets, but your exposure methods by holding some crypto in an ETF and some directly on-chain.
So after looking at regulation, quantum threats, macroeconomics, and Wall Street adoption, what's the big takeaway? It's that you've just been given a strategic advantage. You're no longer just reacting to headlines. You are now equipped to analyze them like a real strategist.
This is your new toolkit. These 4 pillars, education, security, diversification, and compliance, they're the foundation for navigating crypto's crazy evolution with confidence. It transforms all these market events from sources of anxiety into opportunities for informed, strategic action.
Look, the crypto landscape is never going to stand still. It's complex, and that complexity is exactly what creates opportunity for those of us who are prepared. So the real question isn't just what's going to happen next week or next month, it's what will your framework tell you when it does. Thanks for joining us.